Greetings and welcome to the Pransform podcast, Season 2, Episode 6. I'm your host, Christopher Anastasio, and I am thrilled to be joined today by Michael Reeder of the Reeder CPA Group. He's a tax professional, top 100 franchise influencer, provides tax and accounting advice for consultants and franchisees with a focus on income tax, entity structure, funding strategies, and financial projections. So welcome, Michael. Great to have you on the show today.
Great to be here, Chris. Thank you for having me.
You're welcome. So let's jump right into it, Michael. Try to get as much value out to our listeners as possible here. This is an episode they should really gain from when they hear your wisdom on these things that we want to talk about today. So you became a partner at just 27 years old, and you later merged two CPA firms together. Can you kind of walk us through that journey and what lessons kind of shaped you early on in that path?
Yeah, absolutely. So let me do my best to give as much context and also be respectful of the time, because just on that I can probably talk for hours, right? So so I'm from Chicago. I'm originally from Chicago, and I now own the firm that hired me out of college. It was Swartz Financial Management, Inc. When I started working as an employee, I became a minority partner in 2015. We switched the name to Swartz and Reeder Advisors, and then more recently, I bought the firm outright in 2019, and for the last few years, now and moving forward, it's been Reeder CPA Group. And so, back in 2015, when I became a minority partner, we bought out a couple smaller books of business in the Chicago area at the time, and it was just interesting just to be thrown in the fire at that age. Even before that, I was already taking a leadership position at the firm even before I became a partner officially, and so it's just my natural leadership ability. I credit my parents to that. For that, I had good parenting. 3-sport athlete in high school. Lots of discipline, and so all of that stuff prepared me for the real world, right? And so just one, like the firm had a lot of operational issues when I first started working there, and so fixing all that stuff. At least to the best of my ability. My wife joined us in 2013 as well. She played an instrumental role in the optimization of the operations of the firm, and there were just opportunities. There were some smaller books of business around the area that were looking to sell their book for one reason or another. I won't rabbit hole into it, and just getting that experience of like running a CPA firm and overseeing the acquisition of two smaller books into our firm, in my mid to late 20s, it really just threw me in the fire, and just it was challenging, and it really just I figured it out on the fly. Every day is a learning experience. You learn from your challenges, and you just take all that stuff moving forward, and it's all just snowballed and compounded, in just the overall what is now the manifestation. I'm 38 years old. I've been in public practice as a CPA for about 14 and a half years, and I'm a product of my experiences. I'm a product of my challenges. I'm a product of my failures. I'm a product of just, I'll say it again, like my experiences, and just keep showing up every day, facing on the challenge of that day, right? And just, run towards the fire, not run away from it, and just do that over and over again, 14 and a half years straight. It's just, it just makes me more of an asset, not only for my own professional endeavors, but also to be of value to my clients.
Absolutely. I see what you mean, that we could go the whole hour on that, but we will keep moving forward. But I really appreciate you walking through that, kind of setting the table for our listeners. In this year, in January, I believe, you guys merged with Heritage Tax Company. I wanted you to comment on that a little bit, what that experience was like, and how that expanded like your advisory services, the client experience, how you saw that as a value add and an additive experience to the overall operation.
Yeah, so Heritage was a long-time local book of business in the state of Maine, in southern Maine. So, like I said earlier, I'm originally from Chicago. Our legacy client list is Chicago based, but over the last 11 years approximately, I've developed a niche as a CPA firm working with franchise businesses, and that's something that's a national play, and so we get a lot of new franchise businesses as Reader CPA Group clients all across the country, and so that. The majority of our new clients come from our franchise pipeline, which is national, and that's been happening since the mid 2010s. And so that, coupled with the fact of COVID, made working remote, working virtually with clients more normal. Like those two things converging right in 2020, 21, made being in Chicago, like physically, like not really that big of a deal. And so, my wife and I, we actually ended up going to Europe for 5 months in 21 after tax season. I'm actually in Europe right now as we record this podcast. And so, but I say all that because we ended up in Maine. My wife and I ended up in Maine because so my wife is from a small town in Bulgaria. And so it's one thing to go to the small town, like as the Chicago city boy, right? Me. It's one thing to go to do the European thing for a couple weeks. Next thing you know, like you're back on the plane, going back to the States, going back to the big city. But for me, like when we went for 5 months in 2021, after like the meat and potato of COVID, and our daughter was born in 2020, and to go like this small little mountain village in southwest Bulgaria, close to Macedonia and Greece, like to go for 5 months and to get into that small town living. That really made me fall in love with the small town living. So like I really didn't want to go back to Chicago after that. I mean, I still go to Chicago because I have family there and I still go there for work stuff. But to actually live, I like the day-to-day living in a small town. And so when my wife, it's important that I give you the full story, right? Because and it all ties back to the Heritage thing, I promise. When my wife first came to America back in the day, she first came to southern Maine and she loved it. Just classic immigrant story, cleaning hotel rooms, during the summer in Maine, vacation land. And so when we were thinking about, well, where to relocate to, when we were coming back to the States in Q4 of 2021 after 5 months in Bulgaria, if we don't want to go to Chicago, where can we get that small town living? We were thinking about all the normal spots, like do we go to the Carolinas, do we maybe go to Tennessee, do we go to Florida, Arizona, all the normal spots. But then my wife was like, my wife's name is Mimi for everyone who doesn't know. She was like, I loved Maine. When I first came to America, I loved Maine. And so I was like, all right, let's go to Maine. And so that's the story. Like that's why we're in Maine. Like that's it. There's no family in Maine. There was no strategic business purpose to go to Maine. It was just like, where can we go to get small town living? Oh, I love Maine. Okay, boom, Maine. Like the end. And so we got to Maine, 21. Still just doing my thing, just working out of my home office. Working the virtual national CPA firm, and we actually went back to Bulgaria for 5 months in 2022 again. We didn't go anywhere in 23. 23 was a year of laying down roots in Maine. It was like the mindset of, all right, well, we're in Maine, we might as well build community, right? So we're homeschooling our kids. So, my wife was, networking more with like the local homeschool community in southern Maine, and then me being the entrepreneur that I am, I'm like, all right, well, I might as well develop a local book of business. And so I started building. I joined a networking group, and I quickly realized that there's really a shortage. Not only are there less people, right? Not only is there a shortage of people in Maine, and Mainers will tell you that that's a good thing. There's also a shortage of accountants, right? So here I come, like this young hustling kid from Chicago, mid-30s at the time, and so, oh my God, you're young and you're a CPA and you're taking on business, and so it's been like shooting fish in a barrel, getting new business in Maine. And so I networked. I've been in Maine for about almost 3 years now, and so I met Rebecca Roy. She was the owner of Heritage at the time, enrolled agent, been working for about 15 years, and so she was just at a point in her life where she was just done doing everything on her own. She wanted to be part of a team as opposed to running her own firm and all the burden that comes with that. So I've known Rebecca for a couple of years now. She's awesome, and so in 2024, it just made sense to I wanted to have more of a presence in Maine. Rebecca is still young. She still wants to work. She just doesn't want to, have the burden of doing everything herself. So we figured out how to join forces, and we made it effective January of 2025, and it's been great.
That's an awesome story, Michael. Parts about Maine and the small town living, they resonate, so appreciate that as well. In your answer there, I think towards the beginning you mentioned franchising, that sort of thing. Let's kind of switch gears a little bit. You've been recognized 3 times as a top 100 franchise influencer. What trends and if you want to give a little background on it as well, but what trends in the franchising space kind of excite you the most right now for somebody who that resonates with, wants to go to that space, or is maybe just starting out there? What do you kind of see in that area as of now?
So I see a lot of opportunity because I notice a lot of people out there they want to be their own boss, and franchising is a route, is an option, is a channel for that to become a reality. Franchise business in a box. You're in business for yourself, not by yourself. You invest in the proven system of the franchisor. And so lots of things. First of all, just a lot of today's youth, like a lot of people are entrepreneurial, right? And so a lot of people just want to be their own boss from the jump, unless you're again, we don't have 20 hours to have a conversation, but unless you're going to school to become like a CPA, doctor, lawyer, it's what is, to go to XYZ University's School of Entrepreneurship. To me, it's I'd rather just, it just makes more sense just to go start a business. That's the real school of entrepreneurship. It's so I just feel like I have to kind of control myself because these are very passionate topics of mine. I see there's a want to be your own boss culture going on. I see it with kids in a certain context, and I see it with adults, people in their 50s and above. Ageism is real. People are getting laid off, and if you're 55 and you get laid off and you were making $300,000, it's not so easy to get another job. And if you do get another job, it's only a matter of time before someone younger or AI or offshore replaces you if it already hasn't happened. And so a lot of people on the older side of it all, for their respective reasons of the ones that I just mentioned, they see value in starting a business as opposed to going to be a corporate employee again at some big company only to get laid off, in 1 or 2 years, if they can even find a job at that point, and then everyone in between. And so, a lot of people, when they think of being a business owner, they think that the only option that they have at their disposal is to start a business from scratch. And so, but what there is the business for sale marketplace, and the business for sale marketplace is what I refer to the business for sale marketplace as 3 things. One, there are independent, non-franchise business resales. There are franchise business resales, and then there's franchise new territory opportunities. So if you are Joe Smith or Mary Sue out there, and you're whatever age, and you want to start a business, you can start a business from scratch. That's a thing. You and some business partners can start a business from scratch. You guys, you can raise capital and, or you can bootstrap or whatever. But you also can invest, you can also purchase an already existing business, whether it's a resale, independent, non-franchise, or a franchise resale, or, a new territory, but it's still a franchise, so you're still investing into a proven system. And so that opens up a whole new marketplace for a lot of people out there that didn't even know that these options existed as a path to entrepreneurship, as a path to business ownership, as a path to being self-employed. Then obviously, self-employed comes with lots of tax benefits. And then, so me, I owned a CPA firm that hired me out of college. I've done some acquisitions, like we've mentioned. But the thing that I'm the most proud about in my professional career is how the niche that I've created for myself and my firm as a CPA firm working with franchise businesses. That's my real work baby. That's what I created. Yes, I own the firm that hired me out of college. Yes, I've done acquisitions. Yes, my leadership and all that type of stuff played a role in all that stuff and to where I'm at today. Yes, but like my entrepreneurial thing, like my biggest entrepreneurial success story is this nationwide network of franchise professionals that I've built up throughout the country that refer their franchise buyers, whether they're franchise consultants referring their franchisees that they're working with, their prospective franchisees, or franchisors out there that refer their prospective franchisees or existing franchisees, and just build like the long tail of that nationwide network of franchise professionals and franchisors that I've built up over the last 11 years. That's resulted in a pipeline of franchisee businesses working with Reader Group all across the country, and they're all comfortable with a remote national firm for their accounting and tax needs, as opposed to needing to work with that CPA firm that's local. And of course, there's always people that are going to have that preference, and we respect that. But more people today are comfortable with virtual than they were yesterday, and that trend is only going to continue more and more as we go into the future. Not only for clients, but also to all you CPA firms out there listening, you need to figure out how to recruit, train, and build a strong culture with a remote team of tax professionals, because tax professionals want to work from home. They want to be autonomous, and yes, some people do want to go to the office still as well. But so all of that stuff. So when I first learned about the business for sale marketplace in the mid-2010s as a CPA, and started to make myself available as a CPA resource to all these franchise buying candidates out there, I've just leaned into that more and more. Now here we are 11 years later, and it's just, so many people are intrigued to go down this path in terms of business ownership, and they need to be able to provide value to them from the jump, right, in the context of strategic, tax, entity structure, funding, advisory is really important. And so that's the advice that's my process. I work with a lot of new business owners, entity structure strategy, funding strategy, me and my team now. And it's proven concept, because here we are 11 years later, and it's only getting bigger and bigger.
Yeah, thanks for that, Michael. So you actually mentioned, it was a great segue, you've done a lot of advising on things like entity structure, financing, et cetera. Just that list you kind of went through there at the end. What are some of the most common mistakes that you see people making before they sign that dotted line to accept that franchise or start that franchise? Where are you seeing people go wrong and ultimately, let's say, fail and look back and say, hey, I wish I'd done some of these things differently, or this could have been avoided, or that sort of thing?
Yeah, so my process of the free CPA consultation call is a big, that's the solution to a big problem that I've seen out there and is still out there, and that's why our process works, is because a big problem that I've noticed was that people are buying businesses and they're not having a deep dive with their CPA and their attorney during the business buying process to think of all the things that they need to be thinking of, as opposed to 3 years in, when they have that deer in the headlights look, for one reason or another, either on the accounting and tax side or the legal side. So I just saw people out there just getting sold one way or the next on a business opportunity, a franchise, a resale, a start from scratch franchise territory, etc. And there wasn't enough advisory during the crucial phase of actually buying the business, right? And that's the thing. So first of all, a lot of people, when they have questions, they would, the people that they're talking to during that journey would say, oh, go talk to your CPA. Well, a lot of people don't have a CPA, number one. Yeah. And then a lot of people have a tax preparer, or go to H&R Block, and that person is not going to give them, strategic advice. And also they can't afford, they go to a regional firm in their city, they don't have the budget to pay $10,000, $15,000, $20,000 for, advisory, and they're too small to justify those fees. Just a lack of advice, a lack of strategic planning during the crucial phase of actually buying the business, doing due diligence on buying the business, as opposed to the attorney and the CPA getting involved once you're already in business, right? Because when you're in the process of buying the business, it's inevitable that questions such as entity structure and funding are going to come up. And coming at those two things from the angle of strategic tax planning, diving into all of this stuff while you're actually going through the business buying process is the time to do it, as opposed to once you're already in business. Because if you're already in business and you structured your entity a certain way, and you find out 8 months later it should have been structured another way, well, it's too late. I guess you could restructure, but again, it's time, it's extra cost, it's aggravation, and so that's the value that my process of the free CPA consultation provides franchisors, franchise consultants, franchisees, is being a resource, a free resource during this crucial time. And then once they're in business and they want to work with us in a paid context, we can always have that conversation. But it's giving valuable advice during a crucial phase of buying a business. That's why it's so powerful.
Yeah. Oh, thanks for that. That's super helpful. I think a lot of people probably are more focused on how do I run the business once I've got it versus how do I, measure twice and cut once kind of a thing. So definitely hear you on that. Let's pivot a little bit to, and you mentioned a while back in the conversation about self-employed and tax benefits and so forth. If we go to tax strategy and specifically S Corporation Insight, one of your more popular social posts discussed how an S Corp owner balances their salary with their profit distributions. And what's your top eureka kind of tip for somebody who's in that situation, maybe just about to start doing that, maybe tempted to imbalance those two things, more than they should, that sort of thing? What would you tell somebody in that situation?
Yeah, so pretty much under the primary tax benefit of being a taxed as an S corporation is to save money in self-employment taxes, also known as Social Security and Medicare taxes. And so, it only makes sense once, if you're profitable. And I always say when your net income before owner's comp is around $40,000 or $50,000 and higher, that's when the tax benefits of being taxed as an S corporation exceed the costs that go into it. If you were, a sole proprietorship that, just had a personal tax return with a Schedule C and no payroll processing fees. And so the biggest gray area thing, and there are different ways that you can go about determining it, but it's what do you deem reasonable salary, right? And so I like to approach it as I like to approach reasonable salary. Again, there's different ways to do it, but a good starting point is approximately one third, 30 to 40% of net income before owner's profit to classify as salary. And then the remaining 70 or 60% of the profit, while still subject to income tax, federal and state, depending on what state you're in, it's not subject to the 15.3% self-employment tax. And so, explaining to people, I'm a big LLC guy. C corps make sense in certain situations, especially if you're doing QSBS, right, qualified small business stock. But LLCs are a legal structure. They're a hybrid entity when it comes to tax classification, right? And so single member LLC by default is taxed as a sole proprietor. Multi-member LLC by default is taxed as a partnership. And so in those two examples, if you have a very simple example, right? If you have a net income of $100,000 as a sole prop or a partnership, then that $100,000 is going to be subject. It's going to be subject to income tax, federal and state, depending on what state you're in, plus 15.3% self-employment tax. And so so 15,300 right there on the self-employment tax piece. Same example, but you're an S corp and you take about $35,000 of that 100 as salary, and the other 65,000 is S corp profit. Whether you reinvest it in the business, you keep it in the business, or you take it as distribution, you're saving 15.3% on $65,000, right? So it's approximately a $10,000 tax savings, and so that eureka moment for a lot of people, that's the eureka moment that a lot of people have when they're like, oh my God. I can't tell you how many, for example, a big one are professional service providers, right? Consultants, attorneys, realtors are the big ones. Recruiters are the big ones that they're a self-employed professional service provider, and so they're taxed as a true sole proprietor, or they're a single member LLC and they're making $100,000 or more, and they're just taxed as a sole proprietor. Easy, low-hanging fruit. Just go S corp, and so self-employed professional service providers just doing the basic blocking and tackling of S corp with salary control and a solo 401k can save you, I mean, depending on how much cash flow that you need to live, just those two things, combination of self-employment tax on the S-Corp election side and income tax on the 401k side, can save you like $25,000 in taxes if you're making like $150,000 or more. It's just so many people that I stumble across that are, and like if you are a professional service provider taxed as a sole prop, and you stumble across me and I brain dump what I just brain dumped on, I just provide, and the reason why they don't hear it is because there's just, and that goes into a whole other conversation of a lot of, like, are you working with a tax preparer or a tax strategist, right? Because tax preparers, January through April, just grind out last year's taxes with the information that you provide them, and then they're checked out for the rest of the year. There's no advice throughout the year. They're just doing the bare minimum. It's just a tax return vending machine, as I call it, right? Like, tax strategy, it doesn't need to be this thing that you pay $1 million a year in planning for. Like, we're not all Jeff Bezos and Mark Zuckerberg, right? Like, there are, like, you can be self-employed and you need more than H&R Block, or you need more than, like, Joe Smith or Mary Sue tax preparer that's been your mom and dad's accountant, and they just old school $200 for the 1040. Like, people need more than that, but they don't need $20,000 in advisory fees to some big regional firm. Like, there's a middle, and like, so solopreneurs, professional service providers doing a couple $100,000 a year to like small businesses doing 1 to 10 million, and everyone in between, like, that's a sweet spot for a reader. And so, like, that client, the psychology of that client is get my stuff done, be responsive when I reach out throughout the year, and pepper me with a little tax strategy throughout the year. And there's really like 5 to 10 core tax strategies that, as long as you're keeping your finger on the pulse throughout the year, you as the tax strategist are over delivering on the value for your clients. It doesn't have to be this crazy thing. Just S Corp, solo, in this example, just that, not rocket science, can save you $25,000 in taxes.
Yeah, so you kind of beat me to it, Michael. We were going to kind of shift into year-round tax planning. I think you covered it perfectly there. People who sort of forget about it for 8 months out of the year, they're more than likely missing out on possibilities like the ones you described, or it's just not entering their consciousness that they're possible. Somebody's not advising them about it, that sort of thing. So, I think, and you balanced it correctly too. I think, in my opinion, from my experience, it doesn't have to be overwhelming. It doesn't have to be 99% of the year that you're talking about taxes and strategizing and that sort of thing. So that's great insight.
It's a January through April, and forgive me, Chris, I know that we're going off script. January through, like, there's the January through April drill, right? The January through April grind, and then like a mid-year check-in and an end-of-year check-in. In addition to, email newsletters with calls to action with various strategies, that actually have, strategies in the email. Also, call to action to, like, come join a webinar about this, that, or the other, right? Like, cost. It's like, we work with a great cost seg vendor. We work with a great 1031 and DST vendor. Like, come and meet this specialist. Come and learn about this crypto niche tax strategy. And so, just January through and a lot and if done properly, January through April, it's just a matter of putting on paper and filing the stuff that we already knew about, because we were talking about it throughout the year, and you already know, are you going to get a refund break even or but you're aware of it. And January through April is just buttoning it up last year's, because we were already talking about last year during the year. There's that, plus the mid-year check-in and the end-of-year check-in and the value through content, and then and then of course, value is subjective. Like there could be a client out there that needs quarterly instead of biannually, monthly, right? Like, we do have some high ticket service offerings in fractional CFO and M&A advisory. So there could be certain things that are more expensive and require lots of time and planning because of what's going on, the size of the company. Like, I don't recommend fractional CFO to any company that has an EBITDA less than $250,000 unless they're sitting on a bunch of, cash from debt or capital somehow. A CFO, if you hire a CFO, depending on where you are in the country, like, a good CFO is going to be anywhere between $100,000 and $200,000 annual salary. So a fractional CFO, if you're paying $40,000 in annual fractional CFO fees, like that only makes sense in my if you have an EBITDA of like less than 250, it can be kind of tight, But so a lot of startup businesses don't need that. So we have high ticket, but not everyone out there needs high ticket. You can have low ticket, and I don't even like retail, like HR Block, Liberty Tax, like that's a certain business model, which I have a lot of respect for, because I mean they're giant companies and they're obviously making a lot of money, but that's not even a ticket. Like low ticket is like, get my stuff done, be responsive when I reach out, pepper me with a little tax strategy throughout the year. And if you can do that as the CPA firm, if you can do that effectively, you over deliver.
Yep. So just pivoting a little bit, Michael, to some of the area that you work in for like financing, helping companies grow, things of that nature. Can you talk a little bit about how companies can use, let's say, good debt as a launch pad for their early cash flow needs? How can they separate smart leverage from overreaching financially, getting themselves into hot water and that sort of thing? What have you seen in that area?
So I'm a big leverage guy, right? We all use leverage for real estate. Why don't we use it for business? And so getting back to the franchise ecosystem, I'm a big SBA guy. I love the SBA because if you're a startup franchise, you can get SBA funding much easier than if you were an independent startup, right? And so if you invest in, I'll name drop here. If you invest in like a fish window, I'll do window cleaning, like a fish window cleaning or a Pink's window cleaning, and you're a brand new Pink's window franchisee in, Florida, you'll have a much easier time getting an SBA loan. And I'm just using that. I'm using that as an example. You can say the same thing with like a senior care franchise, or a QSR franchise, a catering franchise, recruiting, a pet service, or this that. Like I'm just using window cleaning as the example. If Chris were to invest in a fish window cleaning franchise as a new territory, Chris would have a much easier time getting an SBA loan as a startup franchise compared to if Chris was like just going to set up like Chris's window cleaning, right, which has no history, So and there's like over 7,000 like approved franchisors on the SBA approved franchise list, and so there's a use it or lose it dynamic to get SBA funding as a startup franchise. Because then, if you don't take advantage of it as a startup franchise, then once you're in business, even if you're a franchise, then you're considered an existing business, and then the SBA underwriters want to see historical cash flow if you're an existing business. So if you just don't go SBA when you start, and then you try to go SBA like in month 15, you might have to wait another year until you have a couple years of historical cash flow. And so it's just strategic use of good debt. And the use it or lose it dynamic with the SBA, because by having the SBA, by taking advantage of the SBA while you can, then you can leverage third-party debt and preserve your nest egg. And so a lot of people get caught up on the interest rate. And when my rebuttal to the interest rate conversation is, I hear you, but zoom out and take a look at everything at play here. If you leverage, you put a 20%, $350,000 investment, you put 20% down and you SBA the rest, then yes, you're paying an interest rate of whatever the interest rate is, call it 10%, like whatever that equates to in dollar amount of interest paid in the 12 months, like that's the interest expense. And so many people get hung up on that. Well, what about for every dollar of that interest expense saves you about 30 cents in taxes? So is the interest expense really that true, or is that 100% amount, or is it really only 70% of that when you factor tax savings into and then also by not putting your nest egg assets at risk, you leave your nest egg assets invested in whatever they're invested in, they're earning a return, right? And so what are they like? What are your stocks earning either in your non-qualified brokerage account and or your retirement account? Like what are they earning over here? So there's that earning plus the tax savings. When you factor all that into it, then the interest is not as bad as it, and there's no prepayment penalty. And I can go on, and I do have a lot of material about all this stuff. But that's why and then I also recently made a super, some people will grasp this much easier than others, and then there's everyone in between. But I made a 10 to 12 minute video on how to use ChatGPT to research municipal, county, state, federal, nonprofit loans and grants out there. So if you're a new business, franchise or non-franchise, if you are a new business in the municipality of whatever suburb of Greater Chicago, like that municipality might offer like a $5,000 grant because you're a new business, or you're a new business in a certain industry, or you're a certified disabled veteran-owned business, and or a certified women-owned business, or a certified minority-owned business, or any combination of those three. Like there might be $30,000 to $40,000 of miscellaneous, municipal, county, state, federal, nonprofit loans and grants out there just by just by being a new business in any of those things that I just detailed. And so that plus SBA, and then you could start a business. You can start a business. You can use third-party debt to do it, and then and you can preserve your nest egg. And if you need to dip into your nest egg assets beyond the down payment on an SBA loan, then what about leveraging your nest egg assets? What about doing a margin loan or a 401k participant loan or a home equity line of credit? Sometimes a Rob C corporation makes sense, so that's another way to use retirement assets. Sometimes just a distribution out of your retirement and take the tax and penalty, but offset it with a business loss to offset. There's just so many things. But so bringing it in for a landing on I'm such a leverage guy. So everyone's different. Like some people are afraid of the D word, right? Debt. And I get it. So that has to be respected when you talk to someone. Like if they can't sleep at night because they're so paranoid about debt because maybe their parents they noticed their parents struggle with debt and had to file bankruptcy, or like a house had to get foreclosed on, or they were poor growing up and experienced tough times. So there could be the D word can trigger trauma in people. Yeah. So it's it may make sense on paper, but you have to, and then on the flip side, someone like me, where I have the option of leveraging other people's money and preserving my nest egg, and doing exactly that, preserving my nest egg. I can log into all my accounts every day and I see the money that I've got, and it makes me comfortable. I see my cash pile, even though I'm personally guaranteeing on some debt. Debt is I love that. To me, I would much rather take on debt and preserve my nest egg because that buys me time. It gives me air cover as an entrepreneur to do the entrepreneurial thing. Give me a couple years of air cover, boy, I will flip that loan into I will and then that's the entrepreneurial mindset. And then and I feel even I'm not there now, but God willing, if the day ever comes where I have a net worth of 10 million plus, I feel I'll still have that mindset. Yeah. I could easily do something. I feel knowing me, or knowing myself, because I just love that game so much. You know what I'm saying? And yeah. So it's there's so many ways to leverage. You don't have to start a business from scratch. You can buy an existing business. And if you buy an existing business, you don't have to stroke a check to purchase it all. You can leverage. And so just bringing awareness to all of these things to people out there is really important, because it is much easier to become a business owner than people think. Now, business ownership is not easy, but if you want to go down that path, it's much easier from a financial capital perspective, leveraging strategic use of good debt, than a lot of people may think.
Yeah, I think what strikes me when I listen to you talk through that is that most people probably start out thinking there's one or two ways to get into owning a business, and you just illuminated 10 or 12. So I think there's something to be said about just widening somebody's aperture as to what's possible. I think you just did that in really nice summary fashion there, Michael. I think you did cover this, a little bit when you made the SBA point, but what do you think from a franchisee's perspective, what about their financial projections is going to stand out and help them the most, if you will, with a lender or an investor? Where would the spotlight kind of be there that would be, sort of most positive or most qualitative for them in that situation?
Yeah, so if you are a prospective franchisee and you're pursuing SBA funding, then part of the SBA loan application process is going to involve submitting projections. And so the projections are going to need to be based off, the lender is going to be looking for the projections to be consistent with the item the item 19 in the franchise disclosure document. So to build projections consistent with the item 19 of the franchise disclosure document, you're going to, to be able to do that. Do you want to DIY it? I think it's a great exercise for a prospective business owner, for a prospective franchisee to DIY their own projections, because it's a great exercise. And it's like a business. It's like taking a business class pretty much. Some people are, have a financial background and are financial savvy and can come up with like the coolest spreadsheets, the most in-depth spreadsheets ever. And then you have people on the other side that are just like, that side of their brain, that's not the muscle, that they're more creative, like spreadsheets are not their thing. And so for that person to go through that exercise, if they want to be a business owner, is a great exercise, because they're going to learn. And because no matter what business you're in, no matter what industry, no matter if you're like a analytical person or a creative person, or if spreadsheets scare you or don't scare you, like going through that exercise is a good thing to do for any business owner, because knowing your numbers, knowing how numbers work, understanding what a financial statement is, what is an income statement, what is a balance sheet, what is a statement of cash flow, what are these terms, like that, what's revenue, what's gross profit, what's net profit, what's EBITDA, blah blah blah, like all of these things are important to know as a business owner, no matter what business you're in. And so going through that projection exercise, whether you're doing it because the lender's requiring it, or because you just want to do it for your own internal decision-making purposes, to get an idea of how long it's going to take to break even, how long it's going to take to hit certain profitability benchmarks of X, Y, and Z. It's all good. Like it's beneficial for the prospective business owner to go through that exercise, the financial projection exercise, for these reasons. And so that's, to be able to do that, so if the lender needs it, you need to do it for the lender. And so, but pretty much like everything that I just said, to be able to do it, because you're going to learn something. Number one, like the financial projection, like going through that exercise, you're going to learn something as a new business owner. Number one. Number two, you're going to have to do it if you want to get an SBA loan. And SBA loan or not, it can help you and your spouse and or your business partners make a decision when it gets to go or no go point. Like those projections can be the determining factor in when you arrive at the point of go or no go. If you get an idea, and it's good to go to model projections conservatively, right? The whole prepare for the worst, hope for the best mentality. And so, all of these reasons are why the financial projection exercise is really important.
So, we talked about debt leverage. Can you talk a little bit about leveraging through, let's say, outsourcing? And you even mentioned outsourcing, I think, towards the very beginning of our discussion. But how can a person who's starting out, there maybe a one-person show or a very small set of resources to begin with, how can they use outsourcing to kind of advance their business in, let's say, areas like tax prep, bookkeeping, marketing, things of that nature? What's your take on that, and how do you think they should approach something like that?
I think that it's very important, just primarily just because of cost, right? Any combination of automation / AI and outsourcing, right, is going to be strategic. The argument to do it when you're a startup is because things are tight because you're in startup, and then the argument to do it as you scale is that as the market's going to want a certain fee, you're going to feel fee compression as you scale, and so to be able to deliver the same value at the same price point for a larger share of clients, you're going to have to do something. You're going to have to there's a lot of great we'll use accounting and tax as an example, even though it plays for marketing as well. There's a lot of great talent in places like India, Philippines, South America, et cetera, and other countries as well. And so it all just comes down to training and SOPs. And if you can effectively, what are the repetitive tasks? Do you make screen share videos? It all there's a lot of people around the world, not just the United States, can learn these repetitive tasks. There are economies that are built on them, right? There are the Indian economy is huge, Filipino economy, but it all just comes down to you can it's very strategic, and you have great margins. the difference between those that are successful with it and those that are not successful with it are those that are successful with it train. They have good SOPs and training mechanisms in place, so they train their team. You have to train your team no matter what. And if you can invest the time to train your team, and you train your team, and they're all in India versus various parts of the United States, you're gonna, client just wants if you can deliver the end result. Of course, some services you might have to disclose that they're offshore, and some services you don't. But if you can just, if you can deliver on the value, and you have a happy client, most clients are not going to care, how you delivered it. Your effective utilization of automation /AI /offshoring, that's just more profit for you if you can successfully leverage those tools and people.
Yeah. So we don't have too much time left, Michael. I want to make sure that we get in our last couple of questions here. What's ahead for Reader CPA Group as we finish out 2025, head into 2026? Anything new from a service perspective, or different client niches that you guys are looking at? Anything exciting like that on the horizon for you guys?
Yeah, lots of exciting things going on over at Reader. I'm committed to having the best talent on my team as much as possible. Just a great team of leaders are emerging as the manager level team over at Reader. I'm at a point now with my company where I can only go as far as the A players on my team can take me, and I'm going all in on my A team and supporting my team. And so it's just a very big theme over at Reader right now is just people, like just good quality people, and all of the dividends that's going to pay out. So we are tripling. It's for everyone listening, as Chris and I record this podcast. It's mid-August. It's August 15th, 2025. So over at Reader, we're committed to have the best tax season ever. We say this every year, but this year, it's gonna be the year, right? To have the best tax season ever come January 2026. We're really focused on, we're switching out all of our tech stack. We're switching our tax return software, our practice management software, our CRM. We're optimizing our tech stack. We're making sure that all of the workflows in our everything that goes into client experience at the tax prep level, tax planning, the newsletters that they receive, bookkeeping, payroll, sales tax, just every process is optimized to have a great client experience. So all of that stuff is ops related. And we're really continuing to triple down on being a great accounting and tax vendor /supplier for franchise businesses out there. So we're going to be building more and more relationships with franchisors out there to be that accounting and tax vendor to add value to those franchisor partners out there by being a CPA resource, by being an accounting and tax supplier and vendor for their franchisees, both for tax, accounting, and also for the prospective franchisees, optimal entity structure and funding strategy, just like I've been doing for the last 11 years, like my bread and butter process of work, that free CPA consultation call, to take that more at scale, to be able to train more Reader team members on how to do it. We're going to go to all the conferences. Reader, people are gravitate towards a franchise versus an independent because there's risk mitigation in investing in a proven system as opposed to starting a business from scratch. And so Reader wants to further risk mitigate by, if you want to go into a franchise business, not only are you going into a proven system, but you're also going to be surrounded by vendors, such as, including but not limited to, Reader CPA Group, in order to help you as a business owner, you as a new franchisee, mitigate risk and increase the chance of being successful. So you're going to see us leaning more and more into being an accounting and tax vendor /partner /supplier for franchise businesses out there.
So, last question, at a tactical level, how do you help your clients stay ahead of something like a big tax law change, something like maybe what came out in July in the United States, where they don't have the time to read the whole thing, but there's something in there that impacts them. How do you kind of pivot with your clients on something like that?
So we make sure that we touch on it during the mid-year. The big beautiful bill came out on July 4th, so mid-year, perfect timing with the mid-year check-in cadence that we already have with our clients. So we want to make sure that we have it as an agenda item in the actual consultation calls that we have with clients. We also want to make sure that we bring awareness to it, with our social media content and our email newsletters that go out. Yep. With calls to action and hey, if you want to discuss this more, et cetera, et cetera. But through a combination of individual one-on-one sessions, group sessions, and through the content that we provide.
Awesome. Can't thank you enough for the discussion, Michael. Great catching up with you. A chance for us to do that right inside this podcast. Where can listeners find you? Where can they find you on social channels, stuff like that?
Yeah, absolutely. So the name of my firm, if you're listening, you haven't figured it out or you haven't seen the hat, it's Reader CPA Group. So our website, readercpagroup.com. I'm big on LinkedIn. That's the biggest social media playground that I play around in. So it's my first, middle, and last name, my individual profile. Michael Ian Reader. My middle name is Ian, I-A-N. So Michael Ian Reader, CPA. You can find me on LinkedIn. Send me a connection request. Follow me. Website and LinkedIn are the two best. We've got a Facebook page as well. But I would say website and LinkedIn. And on website, you can submit an inquiry if you want to connect with my team, and we would love to work with you.
Awesome. All right, great. Thanks again, Michael. Hope to catch up with you again soon. I'm sure our listeners are going to enjoy this one. We really, really appreciate your time.
Chris, thank you so much for having me.
Thanks, Michael.